Before we begin, we would like to emphasize that the exciting gift, a bestseller indicator, will only be given to those who stay until the end of the webinar. So make sure to stay with us to receive this exclusive free gift. Don't miss out! Hey traders, friends, and especially the ninza.co community. I'm super excited to be here with you all in this live webinar. And guess what? Our legendary all-time best-selling product is making a comeback with a brand new name. Say hello to SolarWave, formerly known as Nova Wind. But that's not all. Today, we're also bringing back a monster package, King Kong Trading. And King Kong Trading RK, widely regarded as one of the most powerful pullback trading toolkits out there. And here's the kicker. If you stick around until the end, we've got a free indicator just for you. Stay with us till the last minute to claim your exclusive gift. All right, let's cut to the chase and dive right in. What makes SolarWave an all-time bestseller isn't just its effectiveness. It's the fact that it's one of the rare standalone indicators that pack multiple high-impact features into a single tool. Instead of cluttering your chart with multiple indicators, SolarWave simplifies your trading by giving you clear, actionable insights in one place. Its most powerful feature, it identifies the overall trend at a glance, helping you instantly see whether the market is trending or ranging, so you can adjust your strategy accordingly. Next up, it provides pullback entry signals using a follow-the-trend mechanism, allowing you to catch retracements with precision while staying aligned with the dominant trend. And there's more. The trend. Strengthening signal alerts you when the trend is gaining momentum, signaling that the market may be entering a strong push phase. This helps you stay in profitable trades longer instead of exiting too early, maximizing your gains from trending moves. Similarly, when the market enters an uptrend, SolarWave instantly detects it and provides trend-following signals, making it clear that this is a buy-the-dips market, not a place to short. During an uptrend, the indicator generates buy pullback signals, helping you catch high-quality retracements while staying aligned with the main trend. No more picking tops or jumping into counter-trend trades too early. On top of that, SolarWave also delivers trend-strengthening signals, alerting you when the bullish momentum is increasing. This is a crucial signal that the trend still has fuel, allowing you to confidently hold your positions or even look for additional entries instead of closing trades too soon. In short, SolarWave doesn't just tell you the trend, it guides you on how to trade within it, from trend formation to retracements and acceleration phases. SolarWave is powered by two core components that make trend detection both clear and precise: trend vector and trailing stop plot. These are the backbone of SolarWave, helping traders not only identify the trend, but also manage trades more effectively. In an uptrend, the trend vector will always stay above the trailing stop, confirming that the market is in an upward phase. In a downtrend, the trend vector will always be below the trailing stop, signaling bearish momentum. The key difference? Trend vector sticks closer to price than the trailing stop, giving traders a faster and more precise view of market shifts. Both components are powered by NINZA ATR, an enhanced version of ATR developed by ninza.co, designed to be smoother and more stable than traditional ATR. This means SolarWave is not only sensitive enough to capture trend changes early, but also stable enough to filter out market noise and avoid unnecessary whipsaws. Now, let's dive into the difference between ATR and NINZA ATR, and you'll understand why SolarWave uses NINZA ATR to provide more accurate trend signals. ATR, average true range, is an indicator that measures the average volatility of the price over a certain period. It helps identify how much the market is moving. But the crucial thing to note is that if price moves up or down without a corresponding increase in volatility, this signals that the market might be about to reverse. This is where ATR can become unreliable, producing false signals in certain conditions. When you compare traditional ATR with NINZA ATR, the differences are clear. Both indicators are based on the same calculation period, but traditional ATR tends to fluctuate wildly, with sharp, erratic spikes that can create noise. On the other hand, ninZa ATR, the enhanced version developed by ninza.co, is smoother and more stable, offering a more consistent measure of volatility. This is exactly why SolarWave uses ninZa ATR to calculate and define trend signals. ninZa ATR not only reduces noise, but also provides smoother, more reliable trend identification, ensuring that the trend signals remain accurate and dependable under all market conditions. As mentioned earlier, SolarWave is built around two core components, trend vector and trailing stop. While trailing stop is often seen as a tool for dynamic stop-loss management, it also plays a vital role in identifying and analyzing market trends. One of the key functions of trailing stop is to define the trend and identify significant reversal points. When market trends shift, trailing stop helps confirm these reversal points clearly and accurately. In an uptrend, if a bearish candle forms and closes below the trailing stop, it's a strong signal that the bullish momentum is weakening, and the trend may be about to reverse from bullish to bearish. This indicates that the uptrend has lost steam, and the market is likely turning toward a downtrend. Conversely, in a downtrend, if a bullish candle closes above the trailing stop, this confirms that the bearish trend is weakening and a new uptrend is beginning to form. Next, let's focus on trend vector, a key factor that helps you identify when the trend has weakened. When the trend vector starts to flat and is displayed in yellow, it indicates that the current trend is in a prolonged cycle, and the market may encounter pullbacks or even experience a trend reversal. This is a critical point to pay attention to, as it might signal new trading opportunities or early warnings of a potential trend change. When the trend vector begins to steepen after a flat phase, it's a clear sign that the retracement phase has ended and the uptrend is set to continue. At this point, you can feel a significant shift in market momentum, showing that the bullish trend is picking up steam again and gaining strength. This is the perfect time to enter the market as the primary trend resumes and begins to unfold once more. Pay close attention to the trend vector. A useful tip is that when trend vector flat phases occur close to each other, this often indicates that the market is in a sideways phase. During this time, prices are not moving in a clear direction, but are fluctuating within a defined range. This is the moment when you should plan your ATM strategy at the money, focusing on trades within this range. When you notice trend vector flat lasting for a while, it suggests that the market hasn't found a new trend yet and might continue to move sideways for some time. However, when the trend vector starts to steepen after consecutive flat phases, it's a strong signal that prices have broken out of the sideways phase and are likely to move up sharply. This is the perfect time to enter a trade as prices break through the sideways range with the potential for strong upward movement. This helps you identify the optimal entry point, taking advantage of the momentum after prices break out of the sideways range and continue the primary trend. Next, pay close attention to the phases where the trend vector shows long, flat phases. These are strong signals that prices have weakened significantly, especially when the trend has already been running for a while. When long, flat phases appear after a sustained trend, it indicates that the current trend is losing momentum and may be about to reverse. This is a time when you should stay alert and be cautious in your trading decisions. When the trend has been ongoing for a while and is combined with long, flat phases, it's a sign that the trend is losing strength and may not maintain its momentum. At this point, limit your trades during these phases, or if you decide to trade, you should shorten your stopper's target levels to minimize risk. These long flat phases can lead to sudden reversals, so protecting your account during these periods is crucial. When a downtrend appears, the trend vector immediately flattens out, indicating that bearish momentum might be fading, and the market could be entering a short-term correction. This is usually when price forms pullbacks, attracting both buyers and sellers. At this point, it's best to wait patiently for confirmation signals before entering in the direction of the main trend. However, no matter how clear the opportunity may seem, risk management remains the most crucial factor. Always set a proper stop loss to protect your account and avoid sudden reversals that could make the trade risky. A solid entry strategy isn't just about picking the right entry point. It also depends on how well you manage risk and maximize returns. Next, let's take a look at the numbers displayed by Solar Wave. You may notice that as soon as Solar Wave starts to flatten out, a number appears. This represents the number of ticks, measuring the distance from the previous flat phase to the current one. For example, in this case, the distance from the last flat phase to the current one is 62 ticks. Similarly, the next flat phase is 118 ticks away from the previous one. Don't overlook these numbers. They're not just raw data. They're key clues that can help you decode market behavior. Up next, I'll reveal a simple yet powerful trick to help you turn this information into a trading edge. Take a closer look at the upcoming uptrend phase, and you'll clearly observe that the fluctuations from these flash periods are progressively decreasing. While prices are still moving upwards, the market volatility is contracting, signaling a diminishing buying pressure. This could be interpreted as the trend losing its strength. According to the volatility contraction theory, when a trend begins to show weaker movements, it's an indication that the strong momentum of price movement is fading, which serves as a warning of a potential reversal. This is a crucial factor to watch out for because the sustained buying pressure is starting to ease, which could indicate that the market is preparing for a major shift ahead. Next, regarding the pullback signals from the indicator, there are two main mechanisms for identifying them. The first mechanism occurs when a single candlestick touches the trading zone created by the solar wave. At this point, the indicator will suggest a pullback trading signal. In this case, the appearance of just one candlestick within the trading zone is enough to confirm a short-term correction within the trend. This is an important signal that helps traders identify when the price may temporarily reverse before continuing the main trend. In the second mechanism, we will disable the pullback early feature in the settings. At this point, the indicator will only provide a pullback signal when the price enters and then exits the trading zone. This mechanism is more suited for traders who prioritize safety and prefer not to engage in uncertain short-term fluctuations. This is because not every time the price returns to the trading zone will it immediately resume the main trend. In many cases, the price might make a small adjustment and then reverse before resuming the primary trend. Therefore, this mechanism helps traders more accurately identify a price rebound by waiting for the price to exit the trading zone before issuing a trading signal. When the price exits the zone, it provides a clearer confirmation of the new trend, helping to reduce risk and improve accuracy when making trading decisions. This is particularly useful for avoiding false signals and giving traders more confidence in choosing the right entry points. So, we've gone into detail about the signal mechanisms and how to trade with the indicator. Now, let's move on to the strategy that I'm sure you've all been waiting for, utilizing Solar Wave to build the strongest pullback trading strategy. To create this strategy, besides Solar Wave, we also need another indicator, the multi-osc OB-OS overlap. So, how does this indicator work? The multi-osc OB-OS overlap indicator combines several oscillators, specifically RSI, MFI, and stochastic, to help us identify overbought and oversold zones on the chart. By using all three oscillators simultaneously, when there's a crossover between these indicators in the overbought or oversold regions, it provides a strong signal that the market may reverse after a significant rally or decline. However, the special feature of this indicator is that it uses a unique algorithm to help traders recognize when all three oscillators overlap. In this case, the indicator will begin to color the area, signaling that the market might be preparing for a change. However, the trading signal will not be triggered immediately. Instead, the indicator will wait for the appropriate candlestick to form before providing a precise and safer trading signal, allowing traders to have more confidence in the market's reversal. To set up this strategy, we first need to adjust the multi-osc OBOS settings by modifying the threshold levels to 50-50. The reason behind this adjustment is to create a broader range of trading opportunities and improve system responsiveness to price fluctuations. If we keep the default 70-30 levels, the indicator primarily signals reversal trades, which are effective for counter-trend setups. However, during trend corrections, oscillators like RSI, MFI, and stochastics tend to retrace only to the 50 level before resuming the main trend. By setting the thresholds to 50-50, we enhance the system's ability to detect pullbacks, allowing us to capitalize on minor retracements rather than waiting for extreme overbought or oversold conditions. This is particularly useful in trend-following strategies, where the goal is to enter trades in the direction of the prevailing market trend after a temporary pullback. Currently, you can see the trade signals displayed with specific markers. Specifically, a buy signal is marked with the letter O and a green marker, while a sell signal is indicated by the letter O and a pink marker. These signals will help you easily identify and differentiate between buying and selling opportunities on the chart. Next, let's go through the trading checklist to select the most effective signals. First, we focus on the trend provided by solar wave. At this point, we only look for buy signals. When the price approaches the trading zone of solar wave, it's the right moment to prepare for a buy order rather than waiting anxiously for the signal. Simply wait for the price to enter the trading zone and place the order. When the price approaches the trading zone, I will wait for the multi-osc OBOS overlap signal. Pay attention to the plots below panel 2. When they turn green, it indicates a high probability of a buy signal. At this point, be ready with the shortcut key to place a buy order immediately when the signal appears, so you don't miss the opportunity. Since this is a pullback strategy, the pullback signals usually offer lower risk compared to other strategies, and the profit tends to outweigh the risk. The risk-to-reward ratio for this strategy typically ranges from 1:2 to 1:3, meaning that the potential profit could be 2 to 3 times the risk you are willing to take. This is a significant advantage, as having a higher reward than the risk ensures you can maintain sustainable profits in the long term. However, when using this strategy, especially in pullback trades, one of the key factors is placing the stop correctly. Typically, in pullback strategies, the price might temporarily move against the trend before continuing in the main direction. Therefore, if you place your stop too close, you may get stopped out before the price resumes the trend, resulting in missed opportunities. To mitigate this risk, it's advisable to use a trailing stop. With a trailing stop, you can move the stop in your favor as the price moves in your direction. This allows you to protect profits if the market moves strongly in your favor, while also avoiding being stopped out prematurely during smaller retracements. When a buy signal candle appears, it's time to take a buy trade. The stop loss is set to a trailing stop, allowing for flexibility and risk management. A highly effective trading tip is to always adjust your stop loss according to the trailing stop. This not only helps you manage risk, but also increases your risk and reward ratio throughout the trade. For example, initially, you may set your stop loss and target with a risk and reward ratio of 1.1.5. However, as the trade progresses and the price moves in your favor, you can trail your stop loss. This reduces your risk while keeping your profit target intact. By doing this, you can increase your risk and reward ratio from 1.1.5 to 1.2 or even 1.3, allowing for higher profits while maintaining a reasonable risk level. Similarly, in a downtrend, when a sell signal appears within the trading range, we execute a sell order. What makes this particularly notable is that the signal occurs in a position where the trend vector is not flat, indicating that the downward momentum is still strong. This makes the sell signal much more reliable in this context. Furthermore, if the sell signal appears just as the downtrend is beginning, it presents a highly attractive trading opportunity. The fact that the downtrend has only just started adds to the validity of the signal, as it is likely to continue and generate greater profits. Therefore, in such situations, we can confidently place a sell order while closely monitoring subsequent signals to maximize our gains. Next, when another sell signal appears within the trading range, it presents an excellent opportunity to open another sell order. The reason for this is that we are trading in an area where strong downward momentum is present, and this further strengthens our trading strategy. As you may have guessed, this strategy is called the Strongest Pullback strategy. This name comes from the very nature of the strategy, as we capitalize on strong sell signals during the price pullback phase. What makes this strategy stand out is that the signals are confirmed through the agreement of 3 oscillator indicators. When all these indicators provide similar signals, along with confirmation from the trend and trading range, it creates a very solid entry point. This means that the signal has been filtered through up to 5 different layers, ensuring high reliability and minimizing the chances of false signals. By applying the strongest pullback strategy, you're not relying on a single factor, but rather on a combination of multiple signals and confirmations. This enables you to have greater confidence in your trade decisions, with risk levels being well managed and profits being optimized throughout the trading process. Next, we have another sell order, but it's important to note that this sell signal has appeared quite late, meaning it's far from the initial trend reversal point. In this case, caution is key when making trading decisions, as the downward momentum has significantly weakened and is no longer as strong as it was earlier. Therefore, setting a large stop loss and target wouldn't be advisable, as you can no longer capitalize on the strong downtrend. When the downward momentum weakens, it's crucial to adjust your strategy to protect your capital. Setting wide stop loss and target levels in this situation could expose you to unnecessary risk, as the price might reverse sooner than expected. As such, a more prudent approach is to limit the risk and reward ratio, especially when trading under such conditions. This helps minimize your risk, protect your trading account, and ensure that you don't face large losses if the market doesn't continue its downward movement as anticipated. This doesn't mean that you should avoid the trade, but rather that you need to be more cautious and adjust your expectations to align with the market's reality. When downward momentum weakens, a safer strategy would be to use shorter-term target and stop-loss levels in order to keep the risk manageable while still being able to profit in a weakening downtrend. Another highly useful trading tip to help you pick high reliability signal candles is to look for Marubozu candles. These are candles where the current candle completely engulfs the previous one, signifying a strong shift in market momentum. Marubozu candles create a clear distinction between buying and selling pressure, making it easier to identify a strong price reversal. The reason why Marubozu candles provide more reliability compared to other candles like doji or those with long wicks is that the Marubozu candle itself clearly reflects the dominance of one side, buying or selling. A doji, while it might show market indecision, doesn't provide enough strong signal about the next trend. On the other hand, candles with long wicks often indicate sharp price movements, but lack a clear trend, which can lead to false signals or confusion. In addition to the previously mentioned tips, Another trading tip you can use to increase the reliability of sell signals is to look for a continuous sequence of large-bodied red candles. When large red candles appear consecutively in a downtrend, this clearly indicates strong selling pressure from the market. These candles signal a stable and continuous downtrend, making it a very notable entry point. This is a sign that the selling pressure is dominant, and the likelihood of the downtrend continuing is high. However, when a sell signal appears and you notice alternating red and green candles or candles with wicks, wicked candles, this indicates a tug of war between buying and selling forces. These signals are often unclear and may lead to market indecision, so entering a trade in such conditions can carry higher risk. Red and green candles alternating typically reflect market indecisiveness, where both buyers and sellers fail to gain long-term control. Therefore, in such situations, you should limit entering a trade, especially when there is no clear consensus between the indicators and the candles showing a clear winner. This will help you avoid uncertain trades and minimize the risk of loss. Next, when a sell signal appears but the signal candle is not within important trading zones, it can suggest that the trend has not yet fully developed or that the market is in a correction phase. Signals appearing outside of these zones are not only difficult to confirm in terms of trend, but they also increase the risk of a sudden price reversal, which could result in higher trading risk. In this buy signal, you can see multiple signal candles forming. But if you take a closer look, you'll notice that the solid-bodied candle is the one with the strongest bullish momentum. It pushes up much more aggressively compared to the other candles. This is a simple yet highly effective trading tip, but surprisingly, many traders overlook it. When you see a signal candle with a large, solid body and a close near its high, it tells you that buyers are completely in control at that moment. This can help you increase the reliability of your signals. A strong-bodied candle indicates a decisive move, confirming that buyers are dominating. Filter out weak signals. Candles with long wicks or small bodies suggest indecision and choppy price action, making them less trustworthy. By focusing on solid-bodied candles, you can eliminate a lot of market noise and stick to high-probability trade setups. For this buy trade, if you're looking to maximize the power of the trend, an effective strategy is to skip setting a fixed target and instead trail your stop loss along the trailing stop line. This approach allows you to extend your trade duration, fully capitalizing on large market moves instead of limiting your profits with a predefined target. When the market is trending strongly, your trade can stay open much longer than with conventional strategies, letting you optimize your returns without needing to constantly re-enter new positions. To help you automate your stop adjustments, here's how to set up an automatic trailing stop in NINJATrader. How to set up an automatic trailing stop. Right-click on your active stop position. Select Attach to Indicator. Under the Indicator section, choose the plot you want to use for trailing. This will be your trailing stop. Set the stop's distance from the trailing stop. Since this is a buy trade, the stop will always be below the trailing stop line. In the offset section, define how far below the trailing stop your stop loss should stay, e.g. 5 ticks. Note, since the stop is positioned below the trailing stop, the offset value must be negative, 5 ticks. Once set up, your stop loss will automatically adjust along with the trailing stop, ensuring you always have a smart, dynamic stop placement without manual intervention. This strategy is especially powerful in strong trending markets, where price can move for a significant distance before reversing. However, it's important to analyze market conditions carefully to avoid getting stopped out too early during minor pullbacks. However, this approach requires us to answer two important questions: what to trail the stop by and when to do it. If the market is in a strong, clear, and sustained trend, you can achieve significant profits sometimes 3 to 4 times larger than with a typical trade. This is the biggest strength of this strategy because it allows you to avoid limiting your profits and lets you ride the momentum of the market to its fullest. On the flip side, if the market starts to weaken or consolidate, there's a high chance your stop loss will be hit early before the price truly breaks out in the desired direction. This can create a feeling of frustration, especially when you see the price continue to rise after you've been stopped out. That's why it's important to set a reasonable distance between your stop loss and the trailing stop. If the distance is too close, your position will be stopped out too early. If it's too far, you might give up a significant portion of your potential profit when the price retraces. Before we continue with the next section, may we kindly take a moment to remind you that today presents a remarkable opportunity to enhance your trading strategy. Please don't let this chance slip by to secure the King Kong trading packages at an extraordinary discount. King Kong trading package, originally priced at $1,538, now only $596. King Kong trading RK package, originally priced at $199,234, now only $746. All you need to do is enter the code KING during checkout to claim this exclusive offer. We truly hope you don't miss out on this incredible deal. Don't forget, there's still an exciting free gift waiting for you at the end of the webinar, and it's only available to those who stay until the very end. We truly hope you'll stay with us until then. So I've just walked you through Solar Wave, as well as the Strongest Pullback and King Kong trading strategies' powerful methods designed to maximize trend potential while keeping risk under control. But we're not stopping there. Now, let's dive into a special version built exclusively for Renko bars, designed to deliver top-tier performance on Renko charts, Solar Wave RK. This system takes everything great about Solar Wave and fine-tunes it for Renko, eliminating noise and locking in high-probability trade setups with precision. So, how does Solar Wave RK work? Let me break it down for you quickly, clearly, and in full detail. Just like Solar Wave, the Solar Wave RK version retains all the core components, including trend vector and trailing stop, both of which play a crucial role in identifying trends and managing risk. However, the key difference lies in how they are calculated. Instead of relying on NINZA ATR, Solar Wave RK is built around tick-based volatility, making it better suited for Renko bars. Specifically, you'll notice two parameters: offset multiplier trend. Offset multiplier stops. So what exactly does this mean? These values aren't just arbitrary numbers. They directly determine how trend positioning and stop placement work on the chart. Here's what they mean. Offset multiplier trend oppressors. 30 means that in an uptrend, the highest price of the most recent candle will always be within 30 ticks of the trend vector. In other words, the trend vector acts as a dynamic support level, keeping the price in a safe range to maintain the trend. Offset multiplier. Stop your results over 60 means that in an uptrend, the highest price of the most recent candle will always be within 60 ticks of the trailing stop. This prevents the stop from being placed too close, reducing the risk of getting stopped out prematurely due to minor pullbacks. Thanks to this mechanism, Solar Wave RK adapts seamlessly to Renko bars, allowing you to hold positions more effectively while avoiding unnecessary market noise. A crucial point to note when working with Solar Wave RK is that it uses the highest closing price, not the high price, to determine both the trend vector and the trailing stop. Specifically, offset multiplier trend Warchiger 30 and offset multiplier stop 60 are based on the highest closing price since the beginning of the uptrend. For instance, if you observe a strong bullish candle and its closing price is the highest since the trend began, that closing price will be used as the reference for both the trend vector and trailing stop. Now, if the trend vector flattens, it means the uptrend might be losing momentum. However, if the price breaks through this highest closing price, the flat phase ends, and we enter a phase of strong upward trend. This is extremely important for breakout traders. When the price breaks through resistance, creating a new highest closing price, it signals a strong continuation of the trend, allowing you to catch the trend early and capitalize on the opportunity. A crucial point to note when working with Solar Wave RK is that it uses the highest closing price, not the high price, to determine both the trend vector and the trailing stop. Specifically, offset multiplier trend WarChigger 30 and offset multiplier stop 60 are based on the highest closing price since the beginning of the uptrend. For instance, if you observe a strong bullish candle and its closing price is the highest since the trend began, that closing price will be used as the reference for both the trend vector and trailing stop. Now, if the trend vector flattens, it means the uptrend might be losing momentum. However, if the price breaks through this highest closing price, the flat phase ends, and we enter a phase of strong upward trend. This is extremely important for breakout traders. When the price breaks through resistance, creating a new highest closing price, it signals a strong continuation of the trend, allowing you to catch the trend early and capitalize on the opportunity. With the King Kong Trading RK strategy, we don't just switch from Solar Wave to Solar Wave RK, but combine several powerful elements to create an optimized trading system. Multi-osc OBOS overlap is one of the key components that enhances the reliability of your trading signals, providing greater accuracy and effectiveness in any market condition. By incorporating these special settings, King Kong Trading RK helps you identify strong trends from the start, ensuring you don't miss out on major market opportunities. When trading with the Renko chart, you'll notice a significant difference. The beauty of Renko charts lies in their ability to filter out market noise, focusing only on the truly strong trends. When trading signals appear at the beginning of a trend, you can ensure you're entering at the point with the highest probability of success. Entering early in the trend allows you to avoid trading too late when the market has already moved too far and risks are higher. This is a crucial factor that helps you optimize profits and minimize risks in your trades. Another highly important factor is choosing reversal candles as your signals. This is a very useful tip when trading with Renko charts. When you see a reversal candle in a strong trend, it's a strong confirmation that the trend may continue. Reversal candles help you filter out unreliable signals, minimizing noise, and allowing you to enter trades more accurately. Unlike other chart types, Renko charts, with their clear reversal candles, provide stronger confirmation of upcoming trends. With the King Kong Trading RK strategy, you not only have 5 essential factors for trading signals, but also gain an additional critical element from the Renko chart, bringing the total number of conditions to 6. This is why this strategy is so effective. It helps you trade with high accuracy while creating opportunities for greater profits in markets with strong trends. Next, let's take a look at how the demo trade works with this strategy. Here, I'll use EOB ordering to enter trades faster with a speed of just 0.01 seconds, much quicker than manual trading. This is ideal for trading on Renko bars, where speed and precision are crucial. When you observe the plots representing the oscillators, you'll notice they begin turning pink. This is a clear signal that a sell signal is about to occur. At this point, you should activate the sell down on EOB ordering. As soon as the red candle appears, this tool will help you enter the sell trade instantly without any delay. This allows you to capture opportunities the moment the signal appears, boosting your trading efficiency and optimizing profits in fast-moving market conditions. After the price hits the target, you will notice a sell signal appearing. As I mentioned earlier, it's important to prioritize reversal candles when entering trades. However, in this case, the sell trade was stopped out, which indicates the market didn't move in the direction you anticipated. This highlights the importance of sticking to your trading checklist. You must follow it strictly and execute your trades as planned. Discipline in trading is a crucial factor that helps you maintain stability and long-term success in the market. By adhering to the rules, Even in challenging situations or when the market doesn't behave as expected, you will avoid mistakes and keep a solid trading strategy in place. Similarly, for a buy trade, when the oscillators turn green, I will activate a buy-up trade with EOB ordering to enter the buy position as soon as a green candle appears. However, I still stick to my previous view that I trust reversal candles more. The reason is that reversal candles often provide clearer and stronger signals, confirming that a trend has truly shifted. Combining signals from oscillators and reversal candles allows me to have more reliable signals to enter a trade while minimizing risk. Next, the signal appeared, but it wasn't a reversal candle, and I was stopped out as soon as I entered the trade. This clearly shows that when the signal isn't a reversal candle and is too far from the trend, the likelihood of noise, false signals, is much higher. This is a very simple concept, but it's often overlooked by many traders. When the signal is not a reversal candle, the risk of noise is greater because it doesn't have enough strength to confirm a trend change. If the signal appears too far from the trend's starting point, you may encounter unwanted volatility, leading to a quick stop out. That's why selecting the right signals is crucial to minimize risks and improve the effectiveness of your trades. And based on our personal experience, to ensure that risk is well managed and to avoid overtrading, you should only take the first two signals at the beginning of a trend. Any signals that come after that, even if they may follow the forecast, should be avoided. Signals that appear at the start of a trend typically have higher reliability because this is when the trend officially begins and market momentum is still strong. When you trade on these signals, you get the opportunity to enter the market when it is moving in the right direction, increasing your chances of success because you're entering when the market starts forming a clear trend. However, once the trend has been established for a while, the market is more likely to enter a phase of consolidation or unpredictable fluctuations. The signals that appear after that may follow your expectations, but they are more prone to noise and could lead to unnecessary stop-outs. This happens because the momentum of the trend has weakened, or there has been a shift in market sentiment, which increases the risk of these signals. That's why limiting your trades to the signals at the beginning of the trend not only helps you minimize risk, but also keeps you from overtrading and focuses your attention on high-quality opportunities. This approach helps you maintain trading discipline, which is essential for long-term survival in the market. Without discipline, it's hard to manage emotions, adjust strategies appropriately, and ultimately maintain consistent profits. It's important to remember that success in trading doesn't come from impulsive decisions or luck. Success comes from maintaining discipline and sticking to a long-term trading strategy. By focusing on quality trades and sticking to your strategy, you increase your chances of success and can overcome the challenges the market throws at you. King Kong trading for optimal efficiency. This system allows you to automate trade execution, minimizing manual intervention while ensuring greater accuracy. All you need to do is configure the indicators within Captain Optimus Strong exactly as you have set them up on your chart. Once the setup is complete, the system will automatically detect the same trade signals as the King Kong Trading RK package, just as if you were trading manually. One of the key advantages of Captain Optimus Strong is its ability to enable automatic trade execution. You simply choose the right moment to activate auto trading mode, and the system will execute trades instantly whenever a valid signal appears. This ensures that you can react swiftly to market conditions without manual effort. At this point, you can see that Captain Optimus Strong has correctly identified the buy and sell signals, perfectly aligning with those confirmed by the strategy. Now, we will enable automatic trade execution when the price enters the trading zone. At this point, the system will automatically place trades as soon as a valid signal appears. Conversely, when the price exits the trading zone, we will disable this feature to prevent unintended trades. If you don't want to open additional buy orders, simply turn off the long button, and the system will immediately stop placing automatic buy trades, giving you better control over your trading. Similarly, for sell orders, we will activate automatic sell execution using the short button when the price enters the trading zone. To optimize order execution and minimize slippage, I will use a limit order with an offset of 0, ensuring the order gets filled at the exact intended price. Next, let's take a look at a trading demo with Captain Optimus Strong to see how the system executes trades automatically and manages positions effectively. And we have introduced everything about SolarWave, including how to use it, its components, and provided a detailed introduction to the two strategies, King Kong Trading and King Kong Trading RK. Dear traders, exclusive offer, a must-grab opportunity today only. We are excited to announce a rare opportunity designed to help you elevate your trading performance and optimize your account. Additionally, Nova Wind, a legendary product, has made its return under a new name, now known as SolarWave, promising to be an essential tool for all traders. King Kong Trading Package, original price 1,538, now only 596. King Kong Trading RK Package, original price 1,934, now only 746. To claim this special offer, simply enter the promo code KING during checkout. This is a great chance to save costs while gaining access to powerful tools that will enhance your trading strategies. Important note, this promotion is valid for 24 hours only, starting from the moment of this announcement. After this period, the prices will return to their original values. Don't miss out on this unique opportunity to boost your trading efficiency. But that's not all. Those who take advantage of today's offer will receive a special gift once the promotion ends. While we can't reveal the details just yet, rest assured that this gift will be something truly exciting and will provide extra motivation for your trading journey. Make sure you don't miss out. Act quickly and scan the QR code to participate right now. This opportunity not only helps you save, but also brings real value to your trading strategy. Time is limited, so don't hesitate. Take action today. We are committed to supporting you on your trading journey, providing solutions that will help you succeed in this ever-evolving market. Best regards. And the special gift for today is the best alligator indicator, a trend following indicator that was once a bestseller. Recently, we've added a few new features to it, and now we're giving it away to those who stay with us. Only those who stay will receive this gift. So let's take a look at the signals of the indicator on the chart. Thank you so much for joining us. We will remain here, not leaving, to wait for any questions or for you to leave your email below. Our team will respond to you either through email or right now. Thank you for participating in this webinar, and we wish you a happy and warm weekend ahead. Peace.